All right, next up is Sue. Thank you.
Hi, good evening. I've been invited, and it's my honor to be here. And I'm going to talk about purchasing your new home, first home. I work at Keller Williams right down here in Reston. Do you know Plaza America Drive? I work out of there. Let me see. So after hurricane, you're thinking, okay, what do you need other than love? You need a home. And do you have any thoughts when you think about home? Like, does it seem like a obligation to you, or somewhere you want to be, comfortable and be happy? I mean, everybody has different idea. Can I just take a survey of how many people actually own a home right now? Great.
I hate you all.
Well, after this, you're going to change your mind, right? So we're going to talk about what are the common fears of owning a home and how you can overcome it and become a homeowner. So first thing you're thinking is, okay, well, I can't afford to buy a home right now, and but that's not true. I mean, everybody's buying homes right now, and if you're not buying one and you're able to buy, there's something wrong with you. Because just now, I mean, I don't have a lot of rental clients, but sometimes I do it more like as a favor. If you get relocated over here and you just don't know where you're gonna settle down, then I show them these are the rentals you have, and usually, it's over $2,000.
What do you define as being able to buy a home?
Well, first, well, if you know where you want to be, right, location-wise, then first you have to have a certain kind of income and credit. And right now, because of all the fallout after, big cliff that we had, the lending institution is very, very strict. But I'm assuming you guys all have stable job situation. I mean, your sector is not suffering. I mean, we suffered as a realtors when, everybody was just, having foreclosures and short sales. No one was really buying, and all the fear factor. So does that answer your question? We're gonna go into it. So you're thinking, okay, I don't have money for down payment, but you do. I mean, you can buy FHA financing, 3.5%, and then the local banks, I just went to a first-time homebuyer seminar, and I volunteered there for 8 hours. They have as low as 2% down, and VHDA has a program where you can actually receive gifts. And so practically you have no down payment situation as long as you qualify. They have a chart of how much income you can make, so not everybody can fall into it, but since this area is so affluent, most likely you're going to be fine. The median income limit is like $80,000 for one person, so you could qualify for that, I think. And you're thinking, okay, this is one thing, one-time shot. If I can't buy the dream home today, I'm not gonna buy. I mean, of course, we are always thinking, let's say if you can borrow up to $300,000 house. Once you start looking, you're like, oh, I really actually wanna buy something better than this, and you get discouraged. But that's not the end of the world. You have to start somewhere, and that's the key. So 8 steps to buying home is to just, first of all, you have to decide to buy rather than rent, because when you're renting, you're just paying someone else's mortgage. I know someone who's paying $3,200 a month for a small house, and the owner's mortgage is $2,000. So he's not only using your money to pay his mortgage, but he's pocketing $1,200 a month. Hopefully he's smart enough to pay that extra towards his principal, so his mortgage will be paid off in 15 years or 10 years instead of 30 years. So you decide to buy, and then you need to hire an agent. Best way to get an agent is through word of mouth, and someone who has experience, and somebody has worked with them and can give you a reference. But if you're brand new to this area, so I suggest you talk to some people, co-workers or whatnot. And you need to secure the financing. And then, of course, you have to find a home, and you will make an offer, and you do the due diligence, like home inspections, termite inspections, and make sure that you review your HOA documents, make sure you can live with the rules and regulations of that neighborhood. And then the next thing you do is you get loan commitment and you close. And then after that, you need to take care of your investment. Now it's not a rental property anymore. You actually own it. You have to upkeep. So, according to U.S. Federal Reserve Board, your net worth of renters is just $4,000. But average net worth of homeowners is $184,000. So I don't know, that's like more than 40 times of renters. So I made an analogy of maybe buying a house with worth $150,000. Oh, this is a wrong slide. But let's say conservatively, you're increasing the appreciation from 4 to 6% per year. Then you're looking at 3% appreciation on a home purchase for $150 would be $364,000 in 30 years. Now in this area, you know that you're not going to be able to find something for $150,000. You might be able to find like a trailer maybe. Sometimes every once in a while I get a phone call like, oh, I want to buy this house today. And I'm like, where is it? And they tell me the address. It's a trailer park off of Route 50 right before you get to the auto park. Okay, you can buy a trailer for $50,000, something like that. But you see what I mean by appreciation. So, the buying a home is an emotional decision, but on the other side is where you build your wealth, because with your salary, how much money can you sock away a month? Seriously, I don't know anybody who can put away maybe $10,000 a month other than your living expense. That's quite impossible in this area. So I'm going to show you. Oh, here it is. This is what I mean. So let's say you buy a house and mortgage $300,000, and that's a monthly mortgage payment of $1,389.35, and you would have had paid $500,000 in mortgage over the life of the loan. That seems like a lot of money, but after you pay that and you calculate 3% annual appreciation, your house will be $728,000. So that's not even counting the time value of the money. So, money today at $1,389, and 10 years later, $1,389 is probably worth like maybe $1,000, feels like $1,000 or less. But just looking at that, you can see there's a huge appreciation just looking at 3% appreciation.
So what you're saying is don't be afraid of the compound interest on the loan. The value of the house is going to take care of offsetting that.
Exactly. And that's not even counting if you were able to. Yes?
Also keep in mind that the location can also extremely inflate the value of the home, depending on the location, because one of the properties we own is a very old property, but it sits between a middle school and an elementary school and two shopping plazas. Even though it's an older property and we purchased it for under 200, at one point it was up to
around 600, 650. Oh yeah. So real life experience from janitor here is $192,000 It was bought for $192,000 July of 1998 with VA loan. That's basically zero money down. And at that time, the interest rate was like 6%, which happened to be, you know, PITI was $1,400. And, you know, that was about what they would have paid if they were to rent that place. So it was a no-brainer. And then, you know, we had a huge upsurge of the price going up in the early 2000s. So it went up to 650, and then we had some adjustment. But right now, they are selling around $500,000. So just from the pure equity point is they gained $300,000. Now, do you think you can easily sock away the money? That's in 98, now it's 2013, like in 15 years, that's a lot of money for you to save just by yourself. So you know you need to do it. So here, if you just pay $1,200 a month for rent, you would have paid $432,000 and owe nothing. So there are these things that you need to do when you hire an agent. They need to educate you about the market, like, you know, you need to know where you want to be and how much you can afford, and find the best scenario for yourself. Not everybody has the same situation. Not everybody wants to buy a condo or a single family. It's all different from your age, background, whatever you want. So analyze your needs, and then, you know, we'll show you the homes that best fit your need. And they will coordinate you to work with the best professionals, the lenders, the home insurance guy, the inspectors, etc. And most importantly, I've been in this business for 18 years, and there are things that just when you're new, it's difficult to do, is to negotiate on your behalf. It's just exactly how you speak to the other party. You have to know what you're talking about to push and pull and get you the right price. So you get the bargain, but not to break the deal. I mean, you know, you cannot have win-lose situations. I'm sure you know that. I mean, it has to be enticing enough to the seller to consider that offer without, you know, rejecting the offer, so on and so forth. And the new agent might not have all that experience to be able to do it, unless they have a mentor and someone else is looking over the shoulder. And they gotta be very, they have to be very detail oriented, because the sales contract is, for Virginia, maybe 20, 30 pages, and for Maryland, it's even worse. It's like 50 pages long. And unless you know exactly what's in the contract, you cannot protect your client. And a lot of people don't even bother to read it. You know, they just trust you. You know them, and they've been, you know, showing houses to you and everything, so that you just sign your name. But when problem happens, you need an agent who will look out for your interest. So that's pretty much it. So same thing here. So once you get an idea, just, you know, the agent looks at your income and then say, oh, I think you qualify for X amount of money, and I want you to talk to the loan officer. They're gonna, most of the time nowadays, everything's done online. So it's like done in like 10 minutes. My loan officer sends you the link, and you just fill out your basic information, your salary and whatnot, and then they can tell you how much you will qualify for. And then you go back out there to start looking for, you know, homes. And then once you get the home, then you go back and give all the paperwork, like your pay stub and 2 years tax return and whatnot, or you can do it ahead of time. So what they do nowadays, because now it's the seller's market, so you have to be almost receiving a commitment of the loan before you actually go out and put a bid on a house, because you know, first of all, you have to fight off the all cash offers, you know, like $200,000 to $300,000 homes. There are a lot of investors out there that are just kind of scooping up the deal, and they just pay cash for it and rent it out, and they have a huge cash flow. So in order to beat up with them and make sure you get the deal, you have to have a loan almost committed to you. So let's say without the address of the home that you're going to be purchasing, they can write a letter saying, you qualify up to $300,000 with 10% down or something like that. And then you do the appraisal and get the title commitment. Now, I'm seeing some people removing the appraisal contingency because, if they just do anything to get the house. If it's a right place, right price, there will be more than, multiple bidding going on. So you have to make a decision and, see the market moving. If you think right now it's a $5,000 more than, what the other person paid 3 months ago, you're thinking, oh man, I'm overpaying. But if you wait 2 more months, you might end up, paying $20,000 more in that neighborhood. So you gotta know how much down payment you need, how much down payment you could qualify for. Interest rate is around 3.75. Everybody's getting 30-year fix. Do you guys know about PITI? No. So when you get the mortgage, principal and interest is what you get from the mortgage company, and then there's a taxes you need to pay in escrow for real estate, and then insurance, which is covers your roof down to your foundation if anything happens to you. So we call that PITI, and then we normally say be comfortable if your PITI is not exceeding 30% of your paycheck before tax. So I already talked about that. Now, you can put more down payment if you need to, but I would say to leverage your money, if you can get away with less down payment, I think mostly I advise my first-time home buyer for that, because you're not used to owning a home. So if something breaks down, you will just freak out. And then, you don't know how much it's going to cost. So I would just rather you reserve some money rather than putting more down payment and then, go to settlement and you just have $2,000 left. And then what happens is when you buy a home is like a pet or something. I mean, if pet owner changed, the pet is going to have some time to get, adjusted to you. So the perfectly fine home, everything was running great, the home inspection was no problem, and then you move in and the house acts up. The way you touch the house or whatever, the dishwasher breaks down, and then you have a leak from the sink. Just crazy things happen to the house.
Tenants that lock themselves out of a bedroom and go out the window.
I mean,
Sounds like experience.
Just saying.
I mean,
Never happened to you, happened to them in the house.
just you never know what's going to happen.
Doesn't PMI kick in though if you don't put a minimum and
Oh.
down?
All right, good question. So FHA loan, government-backed loan, still has a huge PMI. They keep going up because they have to sock away the money for the people who's going to default later on. But some of the local bank programs, Citibank and Wells Fargo, they were saying they have 2% down program with no PMI. But they do have a very strict guideline. So you need to check with them or work with the agent who knows about all those details of the program. They're going to be, I'm seeing more and more less down payment program coming back in, on the market, because they know the market is picking up, and the bank don't make money if they don't lend money. What are they going to do? They're not selling any product other than the money.
I'm gonna bail them out if they go broke.
well, we just,
Precedence has been set.
yeah, go ahead.
Don't they do the 85-15 program too? So you can borrow 15% down at 15 years, and then you pay the rest at the 30-year rate to get around PMI?
Well, I don't see that anymore.
A loan for a loan?
No, 2 loans.
Yeah, that's
Two loans. The first loan you have, so if you have 5% to put down,
Right.
you would have to pay insurance on all of the loan if you had less than 20% equity. So instead they give you one 15% loan that you pay the insurance on, and then counting that loan, you have 20% equity. So your other 80% doesn't need the PMI insurance.
Okay.
You were just saying you don't see them.
Right, exactly. So, it used to be 80, 15, 5. You put 5% down, and then 15% is the second trust purchase money. And it's a higher interest rate with the shorter terms and everything. Now what they have is like 90% no PMI, lender paid PMI. What it means is you put only 10% down, you don't have mortgage insurance, but they build in the mortgage insurance premium into the loan. So interest rate might be a quarter to 3/8 higher. But you know, if your base interest is going off of 3.5 or 3.25, it's still under 4%. I mean, seriously, I mean, that's a no-brainer. So they do, you know, they did bring it back kind of softer, kind of like under the blanket, you know, instead of breaking up. Because what happened was the second trust lenders that were heavily doing that purchase money second, like City Mortgage, they were just losing money left and right, and the government had to bail them out. So they don't want to do that anymore. So they kind of charge you for the higher interest rate, and then they just use that money for what happens to those buyers that'll default. Okay, so you get the financing, find your home, and you have to look for the right kind of layout, space, sense of value, location. The agent has to know what you really want. And I usually, when I have a buyer, I don't meet them at XYZ location first time I meet them, because you know, there are like hundreds of homes to look at, but I need to know what you need, what your needs are, before we get in the car and drive around like crazy. Because you know, it doesn't matter what you're looking at if it doesn't fit your need. So we usually sit down and figure out exactly what you would, you know, love once you buy the house.
Right. You establish a framework of what you're looking for, and then the agent acting on your behalf actually looks for properties that kind of fit in that realm.
Right, and then you guys, you know, nowadays there's virtual tours and like up to 30 pages of photos. A lot of times, you know, before all this technology, you couldn't really know the house until you actually went to the house and look inside. Now, you know, you can see 360 degree. I mean, you know, virtual tours has come down in price, maybe $150. So I usually provide it to my sellers, and it's wonderful. So you have to have the right price and terms that's right for you. And then you will put contingencies, what's most important to you, no matter what. Nowadays, even, you know, foreclosed homes or short sale homes, I don't care. I always tell them, you need to do home inspection. Don't be skimping on the home inspection, because you almost always get your money's worth. Because, you know, home inspection is $400, but there's no perfect home. Even the brand new homes are not 100% perfect, because the builders may overlook, or after they work on it, something happens to the house. So, you know, I paid like $900 for new home inspection, but it was worth every dollar. What's our fair price? We do the extensive comparable market analysis. We look at how, you know, what it was sold for in that neighborhood, and adjust the maybe types of a home and the secure, you know, square footage, and come to a pricing. So when we do that, we look at, you know, price per square footage, and we consider how many bathroom, does it have bells and whistles, does it have kitchen renovated, deck, fully fenced yard, whatnot. And you know, you look at homes that are in that neighborhood before you actually make an offer. So we do the home inspections, and homeowners insurance policy is also very important, because there are just generic basic coverage, but I always ask them to put the sewer back up. And if they have some other, expensive items like furs or silver,
Or a basement full of computers.
Well, that too. I mean, you never know what's going to happen. I mean, I had my house flooded in the basement twice. And, without home insurance, I mean, who's going to pay for it? So it's very important that you actually look at the details of the policy. When you do home inspection, you look for these things, cracks. Now, the first-time home buyers, they see a little bit of hairline where the drywall meets, then they're like, oh my God, the house is falling down. I cannot buy this house. No, there's no house that's not gonna have any kind of little cracks, because when you put the furnitures and all that stuff, the house is gonna settle. And if it's a settling cracks versus foundation, like in the basement, I actually had a client who had a 1-inch crack in the basement foundation, and we had to call the engineer to take a look at it. Now, if my client didn't do the home inspection, they would have never known. And luckily, it was due to a heavy-duty settling, and the structural engineer said, put another beam to make sure it doesn't further damage. It's not moving crack. But if you didn't know about that after you bought the house, you wouldn't know what to do, and you would just blame us, like, oh my gosh, she stuck me with the house falling apart, it's gonna separate in half or something. So it's very important. And the mold issues, don't touch the mold. I mean, most molds are not, detrimental to one person, but you never know. I mean, you never know. Some people are, seriously sensitive to one kind of mold, and it could be deadly. So we're going to find out about that during home inspections. And then if it concerns more than the regular types of mold, and if there's any kind of plumbing issues or active leakage, we will investigate. And you can always, get out of the purchasing if you have any objections to the home inspection. Now, you don't even have to provide the reasons that you want to, quit these transactions. It doesn't have to be any reasons. That's how it's written in NVR contract. So I, highly recommend that, if anything. And so once you buy the house, you have to keep it clean, keep an eye on it. If there's any kind of leakage, you need to attend to it right away. If anything, water is the biggest damage to the house. Something crack on the wall, whatever, is minor, as opposed to any kind of water damage. You need to take a look at it right away. If your gutter is flipping over and the water is hitting your siding directly during storm, you need to pay attention to that right away. Because,
It's like system maintenance.
Yeah. I mean, under the siding, between the drywall and the siding, you don't see it, but if there's any question as to what the water is doing, you need to figure it out. So I hope you enjoyed my presentation. I don't think I have enough time to go into investment property purchasing, because I think you have so many speakers today. But I'm going to leave you my business cards, and call me anytime or email me with any questions. Like I said, investing in real estate is where you build your wealth. Yeah, go ahead.
With the recent introduction of, it doesn't work from a business perspective, with the recent introduction of publicly available MLSs on the internet, such as Zillow, Trulia, Redfin, do you see the role of real estate agents going down the same route as travel agents and just disappearing?
Well, there's a fee for service. There always has been fee for service. Do you remember Help You Sell? The Help You Sell has been around for a long time. And actually the founder and the owner of Help You Sell, he works in my office. So, they cut their commission to 50%. But what happens is, you can't provide the same type of service and care to your client if you're doing just, fee for service. And what happens is, purchasing a home is like the biggest investment you do. I mean, do you buy anything like often for $300,000 every other month or whatever? It's not like grocery. So you
customers paying for it.
well, you get the government contract and you make the big bucks, but also this purchase is like, average person buys a house like every 5 to 7 years. So if you're gonna go with a fee for service, they're gonna open the door and then they just write you the contract. But if something happens to your contract in the meantime, let's say you lost your job or you're getting divorced or, something happened to you, you need someone who has care and experience to help you out. And if they're interested, I mean, it sounds really horrible, but let's say if they wrote the contract and their job is done, they're not gonna come back and look after you. It's gonna be all on you. And it's too much of a risk for anybody to go through that. Agree? I mean, you need a lawyer for your divorce, you need everybody's professional things for every incident in your life. Yeah, go ahead.
What about a buyer's broker versus a seller's broker?
Well, so I don't do dual agency, which means right now it's very tempting to do dual agency. I have a $289,000 2-level townhouse in the listing. I just activated last Saturday night. I'm getting a phone call from agents that are asking, do you have a contract yet? Okay, I'm very tempted. I want to double dip my transaction. I can put the newspaper ads and I could double dip, but what am I doing? I already know all the interest and situation about the seller, and how can I represent the buyer at the same time? How am I gonna fight for buyer's right and seller's right at the same time? I'm just one person, so I don't do it. There are some people who does it, but it's gonna backfire on you because nobody's happy. And what's going to end up doing is the buyer is like, you're not doing the job for me. You're just on seller side. Well, seller is going to say, well, you just keep on asking me to do this and do that for a buyer. I mean, I did not hire you for this job. So your commission is going to be actually discounted. They're going to ask you for like some kind of rebate and you have to do double duty and nobody's happy. So there's no repeat business. So for me, it's not just this transaction. I got to have repeat transaction. I got to have a happy buyers and sellers that's going to be happy to send me, everybody that they know from work and, friends and family that, that's where the money is. And that's how I want to work. So does that answer your question?
Yeah. One last question.
Yeah.
Out of state. I'm looking at relocating in 5 years.
Okay.
And I know where I want to go, but I don't know the areas. How do we find out about, like, there's a some community within a large geographical area? How does someone go about finding that?
Oh, so you're going to relocate to some other state in 5 years?
West Coast.
Okay. Well, you need to find a national company that has networking. Like our company, we have family reunion once a year. And we go there, and last year, I think 30,000 attendees at Dallas. And what we do is we meet all the agents from different regions. And we talk to them. We're sitting in the seminar like you guys are doing. So we get to know them. And if your current client is being relocated, we can refer you to the right agent that has experience and they're going to take care of you, and they are able to send you the information over the internet, and you can just kind of browse and look at the schools and crime statistics, whatnot. So when you're ready to crack at it once you get there. So you do some homework before, so you're not just going over there and just like, oh my God, who should I hire? So that I can help you with.
Okay.
All right.
Awesome. Thank you.
Thank you so much.